Gentlemen, top of the morning to you. It's April 7th, 2025. Wanted to bring this chart to your attention. This is the S&P 500. I want to bring this chart to your attention because somebody showed me this trend line. I don't follow technical analysis because I don't really trade. I just invest. More of a prefer the long-term game. I don't believe that anybody can really predict prices tomorrow. However, technical analysis is useful to some degree. There are sometimes a few factors that merge together and they illustrate a picture that a lot of people pay attention to. And in this instance, you can see, I would assume that all of Wall Street has this trend line drawn just the same here. So you've got these 2020 lows, about 2,100. You've got the high of 2022, which is 4,700. So you have this magnificent rally off the 2020 low. And then you got this bear market, as they call it, in 2022. Bit of a retracement, not really much of a bear market. But anyway, so you draw this trend line from 2020 low to 2022 low. Here you're at November of 23. You had a bit of a retracement. And then you had this magnificent run up here to about the $6,100 level. And then last week, with Trump's tariffs, we had a 10% sell-off in the market. Now, when you chart this trend line, you see that the trend line, I was discussing this with somebody, and we were talking about how the S&P 500, we were talking about it on this day right here, and we were talking about how the S&P 500 naturally would probably decline down to the $5,000 level. And sure enough, you got it the very next day. You've got this high from 22 at 4,800, which also coincides with the trend line right here. So at 4,800, you draw a line straight across here. You've got a support level as a result of this previous high. You've also got a support level as a result of this trend line here. And you see that the market is getting a nice bid off of 4,800 back up to 5,000. Now, if you're a trader, this is tradable. I'm sure some people took this trade. Obviously, they did because the market is getting bid today. But I'm not going to tell you what to do to buy or sell based on this level alone. Obviously, the market can go up. It can go down. It is interesting to note the trend line, though. If you do get a breakdown below this trend line, right, if this bid does not hold, then you're probably going quite a bit lower on the S&P 500. Maybe down to 3,500 would be a natural conclusion. This is the previous low here. There's no other support, or there's not much else to really help you out. Maybe 4,100. But it would seem natural that you go down to 3,500. And in such a scenario, that would start to make, I don't know if I can draw it, but that would start to make like a very nice head and shoulders pattern that would start to emerge. Now, to put this in perspective, look at how much the market has just run up over time. Here's the dot-com boom and bust, the housing crisis boom and bust, and then Jerome Powell turns the money printer on. Was he Jerome Powell at the time? No, it was Bernanke. Anyway, the money printer goes on at this juncture, and asset prices go straight up. And now you got the rise of populism, the have-yots and the have-nots. Now, I'm not saying to invest based on this chart. I am just saying that this is just an interesting chart. Over time, people are productive. Companies are productive. They solve problems. They drive, they solve that. Business is the art of solving problems. So you have to, don't be a pessimist and just assume that the market's just collapsing in perpetuity. At the end of the day, there are productive enterprises that underpin these numbers on the screen here. And over time, they solve problems. They move the world forward. There's economic progress. And prices go higher. However, could you get a decline here in the market? Anything's possible. If you get a breakdown below this level, obviously it's just an important level to note because there's not much for support otherwise. And if you break this trend line, you're probably going lower, like I said. Now, let's take a look over at, so I just wanted to bring that to your attention because it's just an interesting chart. It's just interesting to note the trend line. It's just, I'm not saying invest based on this trend line, but I am just saying it's interesting. It's an interesting level to note. The market could hold up And you'd say, oh, yeah, what a great support line. Of course it was. You got this retracement. What a magnificent buy. And if the market breaks down, you say, oh, of course. You know, the market broke down below the trend line. Of course it went down. Anyway, nobody knows the future price, which is why I advocate for investing, not just trading. But let's go take a look over at this heat map here. This is actually interesting. You've got the market down today. Apple, let's take a look at Apple. Apple's down about 5.5%. I actually made a video on Apple when they were trading at 214. It was 34 times earnings. They haven't grown at all in the last 3 years. You know, you look at their financials. The site sucks. Anyway, their revenue hasn't really grown. You've gone from, what is this, quarterly? Let's go annually. In 2021, they did $365 billion in revenue. In 24, they did $391 billion in revenue. So not much revenue growth. Their net margins have gone down by 2%. So nothing really fantastic going on here. You know, Apple's just a monopoly. Yes, granted they have a monopoly on iPhone, but it's not a high growth name. So why Apple deserved to trade at 34 times earnings, that was the whole point of my video. I don't believe that it should have. And of course, you're getting a collapse in the price. Now, this is a result of tariffs, but usually that's how the market works. You'll look at something and say, oh, this is overvalued. And then sure enough, some other thing happens to cause it to decline in price. Now, conversely, let's take a look at NVIDIA, which I don't really like this. Let's pull up a... All right, NVIDIA. Financials, fantastic revenue growth from 16 billion up to 130 billion. So what is that, like almost 10x in 5 years? We've got fantastic growth in earnings, net income. Thank you. But look at even on a quarterly basis, their revenue is still growing at 77% year over year. And you come look at the price and you say, NVIDIA trades at 32 times earnings. Normally, that'd be a pretty healthy price, right? If you inverse the price to earnings, you get the earnings yield. So that'd be about a 3% earnings yield. Not very attractive. But when you look at it compared to its growth, then you say, okay, the growth rate is double the price. This is Peter Lynch's method of valuing a company. Basically, price to earnings growth. The price to earnings growth of NVIDIA is below 1, which makes it extremely attractive. Relatively speaking. Now, obviously, this chart isn't too constructive here, but from a fundamental perspective, NVIDIA, you don't know where the price is going to get bid from, you know? Like you said, yesterday you looked at this and said, oh, well, this is broken down here. This is why I don't like technical analysis, because you would say, oh, NVIDIA broke down, it gapped down below this previous low here. It went down again. And how would you know that it would, gap down and then get bid back up? Perhaps it goes back down, and perhaps we're going to some lower price. But the point is that while the rest of the market can flounder, while Apple, I think that, I'm not going to say make this trade, but the notion of shorting Apple while buying NVIDIA seems like an interesting prospect. I think that, Apple doesn't deserve to be trading at even its current valuation. Apple... Thank you. Apple's trading at 28 times earnings. I still just don't, Apple, this stock has just fallen off a cliff. Apple this is a $100 stock, maybe $120 stock. Let's go take a look at the longer term here. Yeah, fair market value for Apple would really be around 130. If you do a discounted cash flow valuation based on zero growth, Apple's a $100 stock, but if it came down to this $130 level, I'd say, yeah, that makes about sense. At any rate, I just want to bring this to your attention. I think that it's just an interesting juxtaposition of NVIDIA versus Apple. They're both part of the Magnificent Seven, right? High growth, tech names in the United States. But Apple trades at roughly, they both trade at roughly the same valuation, but one has significant growth, the other one does not. So on that basis, I think that if you're going to buy anything, obviously the market agrees here because it's bidding up NVIDIA. But if you're going to buy anything, I'd rather buy the company that's growing at 77% year over year versus the company that's not growing at all. That doesn't, what innovative products does Apple really have? And they're so large now that they would have to really come up with something that's just a magnificent disruption to everything that's going on to really justify their current valuation. So, at any rate, I wanted to bring this to your attention. Just an interesting chart. I'm not saying to buy or sell based on this information, but I do think that, and I'm not going to tell you to go buy NVIDIA, but let's just look at their statistics, their fundamentals real quick. All right, so they trade at 32 times earnings, so a little more expensive than Apple, but Apple was just trading at 34 times earnings. So the dividend or the earnings yield is 3.2% on NVIDIA. Nothing too fantastic, but look at their margins. All right, profit margin at 55%. They're generating $2 million in profit per employee, and they've got 36,000 employees. That's incredible. They only pay 13% tax. They generate $60 billion in free cash flow. So free cash flow, I mean, yes, they've got a $2.3 trillion valuation. So, billion, trillion, quadrillion, pretty soon you're getting up to some real numbers here. Anyway, I would rather, of the two of these companies, I would rather own the one that has, NVIDIA is one of the only companies in the market right now that has a growth rate in excess of its price. And usually when you can find a company with a growth rate in excess of its price, that is a very, very good sign. Anyway, this is not investment advice. This is just for educational purposes only. Do your own research. You're responsible for your own risk. And everybody have an excellent day.